Have you ever watched a perfectly matched tug-of-war? The rope itself barely moves, but the ground below tells the real story. Deep, muddy footprints show the sheer physical effort required just to hold the line. The stock market works the exact same way. Every trading day is a continuous struggle between buyers pulling the price up and sellers dragging it down. We can read the footprints of that struggle using a tool called Japanese candlesticks. In his foundational guide on the topic, Steve Nissen maps out specific reversal patterns. These are visual markers that appear when the psychological pressure of the crowd begins to shift. A reversal pattern does not guarantee the price will pull a U-turn. It shows that the dominant team is winded and their grip is starting to slip, creating a moment where the momentum is ready to swing back. This animation shows the anatomy of a single candlestick. The thick center block, called the body, represents the net movement of the price over a set period. The thin lines extending from the top and bottom, called wicks or shadows, show the absolute maximum distance the price was dragged before being pulled back. When the buyers win a session, they leave behind a strong green candlestick, showing they pushed the closing price higher than where it opened. When sellers win, they leave a red candlestick, showing they dragged the price down into their territory. Once you grasp this basic shape, the market stops looking like abstract math. Instead, you start to see the raw psychology of the participants and exactly when they are getting tired. The hammer has a small square body and a long lower shadow. In a downward slide, sellers stretch the wick downward, but buyers yank the price back up. Placed at the top of an upward climb, this exact same shape is called a hanging man. The hanging man shows that the buyers are still technically winning, but the sellers managed a terrifying downward pull. The buyers recovered the lost ground, but that long wick proves they are deeply exhausted. A shape by itself means very little. The context tells you everything. A long wick at the bottom of a hill indicates the buyers are reclaiming control, while the same footprint at the top shows the buyer's momentum is fading. This diagram shows an engulfing pattern, where the second, larger body completely covers the first. At the peak of an upward climb, a massive red candle follows a small green one, instantly swallowing all prior buying progress. The opposite occurs at the bottom of a downward slide. In a bullish engulfing pattern, a small red candle is instantly swallowed by a large green candle, showing the buyers have violently taken control. Imagine a small, tired player holding the tug-of-war rope. Suddenly, a giant steps in for the opposing team and yanks the rope away. Engulfing patterns are highly reliable indicators because they represent an aggressive, physical transfer of power from one side to the other. This graphic illustrates a tweezer bottom pattern, where two adjacent candles share the exact same low point. Sellers tried to push the price down for 2 consecutive sessions, but both times they hit an invisible, unbreakable floor. The inverse is true for a tweezer top. Buyers tried to push the price higher over 2 sessions, but they hit the same invisible ceiling both times and failed to break through. Repeatedly failing to advance proves the current trend has hit a solid wall. This establishes a clear line in the sand, giving traders a precise level to base their future decisions on. You can combine these patterns into a simple, actionable strategy. Step 1 is to zoom out. Look at the broader chart and identify which team is currently winning the major trend. Step 2 is to scan the recent price action for the footprints of exhaustion we just covered, the hammer, the engulfing pattern, or the tweezers. Step 3 is the most vital rule for any trader. Wait for confirmation. A reversal pattern suggests the dominant team is tired, but you wait until the next candle actually starts moving in the new direction before you risk your money. Steve Nissen offers a critical piece of advice for reading these charts. Never try to guess the exact top or bottom of a market yourself. That is like jumping in front of a speeding train. Let the market tell you its secrets. By learning to read these simple footprints, you can open a chart today and spot exactly who is losing the tug-of-war.